One of the ideal use cases of the blockchain and crypto technology is to really disrupt most of the financial institutions that we know today and the way that we do a lot of different transactions, whether that's buying and selling goods that are traditionally done through checks or credit cards, or in financial instruments like stocks and bonds. For now, a lot of those disruptions have not actually happened, and there are a lot of reasons behind that. A big reason is that a lot of transactions on the blockchain have not been as fast or as efficient as a lot of people would like. Bitcoin or Ethereum, not actually all that quick or inexpensive to do financial transactions. So great that they're public and on the blockchain. But if it costs $40 or $50 to make a transaction, you're not going to buy a sandwich using Ethereum. Over the last couple of years, we've seen growth in blockchains that are built to be more efficient and more cost effective. So blockchains like Solana have had a lot of growth and a lot of success, and there continues to be innovation in that space. But one of the advances that happened over the past week is Coinbase actually taking debt instruments onto the blockchain. Now, this is a massive potential market. The debt market is about 10 times the size of the equity market. So if you're investing in stocks, think about all of the value of stocks combined. The debt market is 10 times that size. And this is where a lot of financial institutions actually generate a lot of their revenue because trading is done in kind of a black box. There's not really liquid markets for a lot of these assets. So the blockchain could really change that. And so that's what I want to highlight today is what Coinbase announced and what we should look for in the future, because it's very possible that not only stock trades, but debt trades could be moving to the blockchain, opening up a ton of transparency for all kinds of financial instruments. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And let's start by going to the release from Coinbase, because I think this gives a good outline of exactly what they're doing. This is the announcement of Project Diamond, and this is from Coinbase Asset Management. Some of this asset management business, Coinbase actually acquired in the last year. So they're really starting to pull together these assets that create an ecosystem in the blockchain. And this is particularly built on the Base blockchain, which is a layer 2 on the Ethereum blockchain. All that's a little bit confusing, but basically the idea is that Base is going to be faster and more efficient to make transactions than Ethereum would. There also isn't a native token, so it runs a little bit differently than a traditional blockchain that has come out in the last 5 or so years. So what they're doing is they have a smart contract powered platform for institutions to create, buy, and sell digitally native assets. All three of those are really important because you have to be able to create the asset. In this case, they're going to talk about a debt instrument, and then you have to be able to trade it or buy it and sell it. And if you're doing that with a smart contract, as an investor, you can know, okay, these are the details of the contract. Here's the standard pieces, and it's all written into code. A lot of times these contracts are very complicated for debt instruments. And yes, some of the information, information is filed with the SEC, but you could be reading dozens or hundreds of pages just for a single contract. So understanding exactly what goes on behind them can be very complicated. So this could potentially make that a little bit easier because you move the contract into code. And what they said is they have launched the first execution of a debt instrument on the platform in preparation to enter the Abu Dhabi Global Market Reg Labs sandbox. This is again an example of cryptocurrencies and the blockchain being a global phenomenon. So some of these assets are not necessarily going to be trading on US exchanges. They could be regulated elsewhere, in this case in Abu Dhabi. And what they did with this asset is the debt instrument was issued, distributed, and matured. So basically, this was not a debt instrument that's going to be maturing 10 years from now. It was actually matured very quickly. And this was just a demonstration of the way that this would work on the blockchain and with this kind of financial product. So they're really starting to show this off and show that if you're a financial institution that working with Coinbase, you could actually use this in the future. There's a couple of other important pieces. This instrument was denominated in USDC, so not necessarily US dollars, but a stable coin that is based on the US dollars. The USDC token is no longer run by Coinbase. It's run by Circle, but Coinbase actually benefits from it, generating revenue from the interest that's backing that token. And they were proving near instant settlement and speed on the base blockchain. And the idea with Project Diamond is to enable a future where institutions can create, distribute, and manage a wide range of digitally native assets directly on chain. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So why would you want to do this? And this really gets to the way that financial trading works in a lot of cases. The stock market is really open and public and very liquid. If you want to go buy a stock, there's a market of buyers and sellers, a bid and an ask that you're going to be able to buy or sell into at any time that the stock market is open. But that's not the case for a lot of debt instruments. For example, I'm looking at Coinbase's debt outstanding right now. There are 3.38% 2018 senior notes due on October 1st, 2028. Now, I'm not sure exactly where you can buy and sell those, but it may be the case that you would just have to message your broker directly at one of the large financial institutions and see if they can make a market or tell you how much they would buy and how much they would sell that debt instrument for. And then if you do decide to buy it from them, then they need to go out and acquire that asset, which may not necessarily be easy to do. And this is how a lot of debt trading happens. It happens on Bloomberg messages or via text message, which sounds a little bit crazy, but that's the reality of the way that a lot of the financial institutions work, and trillions of dollars are traded in this way every single year. So is there a way to do that more efficiently? And I think what Coinbase is at least trying to do is demonstrate that this could be more efficiently done on the blockchain. You could make that bid and ask, create a marketplace digitally right there on the blockchain, because the contract itself and the ownership of those assets would be known on the blockchain. So you would know who's buying, who's selling, what the prices are, and it wouldn't be this opaque market that we have today. So that's the idea behind it, is to kind of bring some of these financial assets into a more modern digital world where there's more price discovery and more liquidity. And if that could be the case, you could do a lot of this trading programmatically. That may actually be bad news for a lot of financial institutions who make a ton of money making markets in some of these lower liquidity debt products. Like I said, if you're going to trade any specific piece of debt, somebody has to make that transaction and broker that deal. And that's what a lot of financial institutions are doing. That's why trading volume is actually very important for them. The more volume that's going through the system, the more money they're going to make, because they're buying at a lower price and selling at a higher price. This is potentially a very disruptive technology. This is why I think it's interesting that Coinbase is working with a lot of the larger banking institutions like BlackRock, who is actually an asset owner. So if they are able to buy assets or sell assets a little bit more efficiently, that could be a benefit to a company like BlackRock. That could be a reason that those two are working together. But I think this is really just the start of what we're going to see. I have been hearing for years that financial institutions have been testing the blockchain and how are they going to use the blockchain to put digital assets and financial assets on the blockchain and trade them, track things maybe more efficiently than we used to. Could also lower that settlement date. I mentioned that in the press release, but settlement right now for a stock is going to be 3 days, and for debt, it could be multiple days as well. So could you settle that transaction almost instantly with USDC funds or with borrowed funds? I think that would be a great financial benefit to the industry. But that's the way to look at this. That's the massive market that we're going after, is not just the stock market, but also the debt market. And Coinbase could play a major role in those institutions in the future. So something to keep an eye on. But what did you think about Coinbase's announcement? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.